This Creditors in Commerce classroom session, hereinafter session, is the private exchange of ideas and concepts between the providers and the recipients. The content is not meant as legal advice. The use or attempted use of any idea or procedure discussed in this session as applied to the recipient's own personal transactions, cases, or controversy, or applied to other cases, may or may not result in a favorable outcome or the same outcome as discussed in this session. Each transition or transaction, case, or controversy may be different as a result of unique actions or unique statements made by the parties therein, and each different act or statement in any transaction affects or may affect whether any procedure or idea discussed in this session is relevant to your transaction or that the outcome thereof will be depicted as in this session. The discussion of ideas or procedures in this session is not exhaustive of the subject being discussed. Many ideas and concepts that can affect the outcome of any legal or commercial procedure are not discussed in this session, and the fact that you may not be aware of these issues may have an adverse effect on the outcome of your procedure. It is the responsibility of each party to understand his own transactions and to apply the appropriate and complete concepts necessary for a procedural and substantive remedy thereto. This session may be redistributed privately by any recipient to another recipient requesting them, conditioned upon the fact that this notice is provided therewith. If you have any questions, you may contact Brandon by email at harmony@creditorsincommerce.com or by telephone at 702-866-9077.
All right. How's everybody doing? Good? All right. Want to start off? Anyone have anything to share about practicing being a creditor? Anyone? You're not ready to share? Oh, geez. Are you attached? Are you attached to not being the first one? Okay. Turn it on.
Are you there?
Yeah.
Hi. So just in the process of me filing and learning this whole process, I've just woke up the other morning and said, I'm not going to wait around and have everyone check my stuff. I'm just going to fire it off. I just got to do it. I just got to jump in. So I jumped in, and long story short, I got my little notice saying these files need to be checked. And so I got on the phone with this woman, and I said, my forms were marked bad, so I'm just checking in. There's some correlation with the 1040s, and I need to go in and amend them. And I said, so they gave me this number to call you because you're the helpline for, the online stuff for 1040s. And I said, so I want to go back and amend all my years. And she said, why would you want to do that? And I said, well, as an entrepreneur, you're taught that you pay yourself as minimal as you can, and you put all your money back into your business. Well, I did that for the last 4 years. And now, if I go to try and buy a car or a house or anything, my business has gone under, and my personal that my CPA had us claiming was like $15,000 a year. So I have no record of making $600,000 a year through my business. So I'm going to go back and I'm going to amend all my 1040s. Why not? She said, well, all right. She said, do you have a CPA helping you? Because, it can be complicated. And I said, well, I don't. Do you know what CPA's jobs are to do? She said, what? I said, well, to hide all of our money and to avoid us paying any taxes. That's what got me in the mess in the first place. She goes, well, I've got a number for you. She said, right here on the website, you go to this place, you look up Vita or whatever, and she said, there's plenty of places in your area that'll help you for free amend all your tax forms and help you get all your taxes done for you with people that you can trust. And I was like, great. And that was just my phone conversation this morning with someone at the IRS.
I was an IRS agent.
Isn't that great?
IRS agent giving you advice on accounting.
Right?
Yeah, that's great.
Yeah.
Thank you. Anyone else? No? Nobody's been practicing being a creditor. Jeez. Are we in for quite... yeah. Well, all righty. Anyone on the phone have anything to share? Remember to unmute *6. And going once, going twice. All righty. Yeah. You got something?
Yeah.
Awesome.
All right. Well, this week.
Turn it on.
I'm sorry. Train of thought here. Okay. With the hard times that people are losing their jobs and it really makes you think about money a lot these days. At least I do. I have. My ego has, right? And I see myself being more not so attached to money anymore. I see it more as with the things that I've been learning here through Brandon and online. I'm more. It's opened up more doors of freedom to I don't worry about things as less, or I know now that at least I see a door through this being a creditor that it cannot be so attached to it. So people have been through hard times. I'm sure we even have a lot of friends here who ask us, can we, I'm having hard times, can I borrow some money? Any amount would be great. And in the past, I've seen myself go, gosh, how creditworthy is this individual, this friend of mine, and how long is it probably going to take to credit back my account? But so this week I was, a friend of mine asked me if I could help them out, and I was like, this is a great chance for me to practice being a creditor, So I let them borrow the money, but it was a great process where I wasn't really wondering when or even if they would pay me back. So I was like, yeah, this feels great. This is what feeling like a creditor or being a creditor is a part of. So
yeah,
thank you.
Definitely. Thank you. All right. Okay. Now, I was thinking tonight we may do some kind of an overview of everything that we've covered so far. Just thinking that I know that there's still actually new people. We actually even have some new people, brand new tonight, that missed, the first 6 or 7 classes. So what I was thinking, is there anything in particular that any of you feel we should do some more time on, you don't feel you have a full comprehension or understanding of? No?
Could we do something where we kind of like a organizational, you're going to do the overview, but like a flow chart to it, like this needs to be done before this, or it's recommended you do this prior to this, or this facilitates that.
Summary?
Of what exactly?
Flow chart. Priority of sequence. This needs to be established before these things.
To be a creditor? Are we talking about a creditor in general? Or are we talking about specific process?
Like all the processes.
Okay, so wait. So what you guys want me to do is you want me to cover the last 7 classes tonight? Yeah. Right, okay. Okay. Let's see what we can do. But okay, Reader's Digest condensed version. All right.
Well, we talked mainly about, 2 or 3 different forms that we use, generally like the 1099 OID and the 1099A. And maybe for some of us we can hear it, but maybe, like he's saying, like a flow chart or just something like you would use this for this or this, because I find I get them confused, like which ones you use it for what.
Okay. Well, seeing as we have the materials already available online of all the past classes, I don't want to, try to repeat everything. So what we'll do is we'll clarify, like if you have a question about the specific form and the processes that go along with that form or whatever, we'll do that piece by piece. So do you want me to start with the 1099A and how that can be applied? Okay. 1099A, let me remind all of you, I am not qualified to give legal or tax advice. Nothing that I say here tonight is meant to be construed as such. So I'm going to give you my understanding of how these forms may be used or how I may use them. However, if you don't understand them and don't do the research for yourself, don't do it. Okay? 1099A is for reporting of acquisition or abandonment, okay, of secured property. When you may use this, we've discussed doing an acquisition on an asset to close accounts. So if you have an open account from, let's say, years in the past, and you just want to make sure that that account's been closed, so you're going to do an acquisition of the asset within that account. Okay? So an acquisition is different than an abandonment, and it's differed by box 5, I believe. Yes. Okay. Box 5 on the form has a question on there, something to the effect of, is the borrower liable to pay this debt back, or something to that effect. Okay? If you mark yes, you are reporting an abandonment. Okay? If you mark no, you're doing an acquisition. Okay? So in the case of closing an account, so if you ever do an acquisition, there is no funds to be paid back. Okay? So let's say you have an open account, and that open account may still have a liability on it, and you just want to close it. You're not looking for any kind of a return because there was no interest withheld on that account. So you're just looking to acquire the asset that's holding that account open. In that case, you would be the lender on the form. Whoever the holder of the account is would be the borrower, and you would mark box 5, no. And that is an acquisition. Okay? Interesting little story is, no, he's not here. One of the members of the class, one of the first ones to get a 1099 acquisition out on an account, calls me the other day, and he's all, I logged on to my, it was an open account that still had like a $700,000 liability on it, and he sent in his acquisition on it for the full amount of the original account because he's acquiring the asset to close that account down. And he calls me up and he says, yeah, I logged onto my account online to, check the balance or whatever. He's all, there's no balance. It just says inquire. So I thought that was interesting. Now, it may say inquire because they may be waiting the 30 days to see whether he's actually reported that acquisition to the IRS. Because when you send a copy B, which if I'm sending out an acquisition form to the borrower, I would send them copy B of the 1099A. And when you send that out, you actually have 30 days from the time you send that out to actually to report to the IRS what you just sent. Okay, so you don't actually have to report it to the IRS first. You can send out your copy B, because remember, whoever you're sending it to has 10 days to rebut that form or to correct that form, and they must send you the rebuttal or correction. If you don't get anything in 10 days, feel free to file whatever you're going to file with the IRS. Okay? So basically, his next statement of account should show a zero balance when he receives it in the mail. Okay? Because he acquired the asset. If he acquires the asset, there is no account. Okay? And that's probably why his balance isn't there and it says inquire. So, and this was he just sent it in like a week ago, week and a half ago. So that's how fast it affected his account. He used it on a mortgage, on a mortgage account. Because remember, the account has nothing to do with the trust deed or anything else. But once the obligation on the, wait a minute, that must be somebody who called in. Once the obligation on the trust deed, or the obligation on the account has been fulfilled, the trustee must file a reconveyance and all that on the deed, okay? So that's an example of acquisition. Here, pass the microphone to the back, please.
Say we're doing an acquisition on a bank account or credit card, and we receive something in 12 days. What do we do? It's not 10, but it's 12.
Is it 10 days from postmark of when they received it is where I would count that. Let's say you drop it in the mail and you have your certified, you should send it certified. It's a good idea to send it certified so that you have a tracking of when they received it. And if you receive their response within 10 days of when they received it, it's good. If you receive it after 10 days, it's up to you. Are you going to go through a commercial process? Because at that point, if you say nothing and don't respond to them, what are you doing? You're accepting it. And you're agreeing. So don't think because it's 2 days late, you could just, well, that doesn't mean anything. Okay? You're now in dishonor. Okay? So keep that in mind.
Another question is, do they have to send it to you certified or registered?
No.
So who's to say you even received it?
Again, that's why we put so much work into our administrative process. We want to have evidence and proof. Remember, facts are on the moon, dude. When you show up in court, 9 times out of 10, whoever's prosecuting or against you, they have no evidence. A court case can be based on an invoice. How is an invoice evidence? They don't have proof that they did anything to earn the invoice. They don't have proof that they sent you the invoice. They don't have proof of anything but the invoice itself. They won't even have a signature on the invoice, a verified statement from someone saying, yep, this guy owes us this money. Okay? That's why when we discuss the administrative process, we put so much time and effort in the verification, certification of our process, because we want a very strong process so that if we go into court, we have some evidence that they can't touch. Okay? And then it'll be whose evidence or whose public record outweighs the other.
What has been your past history or observance of, do people get them usually, within 11 days, 12, 30 days? Where does it usually, when we get a response back from the bank?
I've never gotten a response.
Well, you said okay.
You mean on a 1099-A?
Exactly.
No,
exactly.
I've never gotten a response.
Okay, because everything's above board. Everything's on the square.
And if you send it just as a tax form, now I'll tell you that there's a lot of, and I'm not saying this is right or wrong, but there are people out there advocating that along with this 1099-A, you're sending this entire administrative process along with it. I'm saying why? I wouldn't even send them a letter. When I send W-2s out, do I send a letter to the employee saying, here, this is what you're supposed to do with the W-2? No. They're presumed to know. Okay? So don't muck it up. All I do is I put it on the envelope to make sure it gets routed to the right place. I have a statement at the bottom of my envelope that says, important, all caps, in red. And then the rest of the statement is in black, but still all caps, and it says, federal tax documents enclosed. That way, when it arrives at the bank, it goes to the accounting department. That's where tax forms go. And that's who should be dealing with this. So don't send your tax forms to the CFO. Guess what? He doesn't actually do the taxes. Okay? Don't send it to the president. Send it to their headquarters is probably a good idea because that's maybe where the accounting happens if you don't have a better address. Okay, so microphone here. I got it over here.
Yeah, I got a question real quick, Brandon. The suspicious activity report from the IRS, which one is that? 3437?
No, 3949A.
And would you send that to the party along with the IRS? if it doesn't get adjusted?
No, you don't have to send it to the party.
Just the IRS?
Just the IRS.
Okay.
You talked about sending the 1099-A out and then reporting something to the IRS. Not on the form he was talking about, but sending something. Is there another? Do I remember there's another copy of that goes to the IRS?
Yeah, there's 3 copies. To all information returns, there are 3 copies. Copy A, copy B, and copy C. Information returns are, anyone? Bueller? Okay. An information return is a 1099 is an information return. Every 1099, 1099A, 1099B, 1099C, 1099 OID, 1099 miscellaneous, they're all information returns. A W-2, 1098, these are all information returns. They all have 3 copies. Copy A, the red private copy, goes to IRS, always. Unless you're filing electronically. Do not file electronically and mail them a red copy. You're going to have double entry. Okay? Copy B goes to the payee. Now, the payee could be listed on the form as a borrower. They could be listed as a debtor. On the 1099-C, it's creditor-debtor. On the 1099-A, it's lender-borrower. Okay, so copy B goes to the party that is receiving this notice. So if I'm the one creating it, or let me take that back, because the one filling out the form may be the payee. But the payee, the second party listed on the form, there's on all the information returns, there's a box at the top left, and underneath that is another box. The box in the top left is always the payor, or the lendor, or the creditor. Okay? The box below that is the payee, or the borrower, or the recipient. Okay? Copy B goes to the recipient. Copy C goes to the borrower, or lender, or creditor, or payer. Okay? Depending on which form you're using, copy C. So if you're doing an acquisition and you're the lender, what copy do you keep for your records? Copy C. Okay? All right. In an abandonment situation, and we just now discussed how an acquisition works. Now, an abandonment, the only difference on the form is that box 5 would be marked yes. Okay? That's how you determine it's an abandonment. An abandonment, you're saying that there's some kind of funds there or some kind of property and it must be returned. Okay? Or that the borrower needs to pay. Okay? Or that they're holding something that needs to come to you. Okay? That's an abandonment. Acquisition, they don't necessarily have to return anything to you physically. Okay? Anything else about abandonment? Oh, an abandonment, for instance, we talked last week about interest, principal and interest, right? We know that in order to claim a return of our interest, it's a 3-step process. First, we identify the interest. Am I getting a ring here? I am. Okay. First, we identify the interest and claim it abandoned. So if it's claimed abandoned, what's expected of those funds? Returned. Okay? So, I identify the interest and I claim it abandoned with which form? 1099-A. Okay. Second step. Report the interest withheld. And what form may we use to report the interest withheld? OID. And which box tells us the amount that was withheld? Box 4. Okay? Box 4 is the amount withheld. Box 1 is what? The original issue discount. So it is, how would you report box 1 on your 1040? Income. It's interest income. Gets listed on Schedule B, comes and goes in as income. And whatever's in box 4 would be listed as what on the 1040? Withheld. Okay, so step 1, identify and report abandoned. Step 2, report the withholding of the funds. And step 3, claim a return of the interest. And what form do we use to claim a return of our interest? No. 1040. Okay? So the 1040 gets us a return. So that's the 3-step process. Yeah, there's some microphone, I think, floating around back there. Okay. There's a microphone. Oh, you got it.
So in determining whether I'm going to abandon 2005, the corporate income that we made, my husband and I we filed jointly for our personal 1040s. So now if I'm going to go back and amend my 1040, it makes sense that I would need to go back and file as single, but then I would also have to have him file as single.
Have you looked at a 1040X? You're
No,
talking about
not-
amending a 1040, right?
Yeah, amending a 1040,
Okay. So if you're amending a 1040, what tax form are you going to have to fill out?
the 1040X.
And have you looked at it?
No.
Okay.
I was going to come here and ask a couple questions first, but so the
Before
answers are on
you
there.
Look at it. You're going to
Okay.
ask the questions. Is that a creditor or debtor? Okay. Well,
I thought it would be a good question to ask in the classroom, but I guess it's all self-explanatory.
It's very
then.
self-explanatory. It's right there on the second line or third line. It says, what did you file before? What are you filing now? So I was married before, and now I'm filing single. It's literally 2 lines right next to each other. One is, what was it originally? What is it now? And it's got a whole bunch of check boxes. Filing status.
Would he have to not then amend his return? It wouldn't matter for her husband or husband?
I would look into that. If nothing changed on his, no reason.
Yeah.
But if she changes to single, it changes the exemptions and whatnot on his. So were you married filing joint or married filing separate?
We were married filing jointly in 2005.
You've got a complicated situation, and I would do some research, maybe even call the IRS and talk to them.
Okay. Yes, them.
Hold on. What is that?
That's your power cord to your computer. It's going to die.
Yes, please, before we lose everyone on the phone. Okay, go ahead.
2 questions. First question, an acquisition, is that a taxable event?
Is an acquisition a taxable event to
you?
who? The lender or the borrower?
The lender.
Is the 1099A acquisition a taxable event to the lender?
So if you negate as your friend did, a $700,000 event,
Right.
Is that a taxable event as far as it being reportable on your 1040 then?
I'm not sure. I don't think so because of what you're reporting.
Mm-hmm.
But look into it. Maybe ask the IRS. I talked to an accountant today about it, and he didn't seem to think that there was anything that happened if you filed an A as far as the lender's taxes go. Mm-hmm. The way he looked at it was, I don't even think you get a benefit of any kind because it's just an acquisition or an abandonment. I think realistically what happened with the taxable event that's usually created in what I would call the normal use of the form or the most frequent use of the form is when people lose their properties.
Correct.
Okay? Typically, if they're foreclosed on, they're going to receive a 1099-A in the mail.
Correct.
Okay? That 1099-A is going to have box 2, the principal owed, and it's going to have box 4, the market value.
Right.
If the market value is less than, if box 4 is less than box 2, meaning the market value is less than the principal owed, they're going to mark it as an abandonment, saying you have to pay these funds back. And what's going to follow that is a 1099-C, or if they're canceling it, or either that or they're going to take that debt and make it into another account. So they're either going to take the difference and create another account, send it maybe to a collection agency, or maybe try to take you to court on it, or they're going to file a 1099-C. And the 1099-C is a cancellation of that overage or that difference between those two numbers. That's a taxable event. The lender or the creditor on the 1099-C gets a write-off. The debtor on the 1099-C has to declare it as income. Okay? So if you get a 1099-C for, let's say, the amount you owed over your house and the amount that they supposedly sold it for was $100,000, you're going to get taxed on $100,000 in income by being the debtor on that 1099-C. Okay?
Second question. If you're doing an abandonment issue, as we had talked about, if the individual bank and or credit card had been acquired by another company, how do you find out or discover which one to use at that point in time?
You're looking to do an acquisition on an account?
No, this is for abandonment. As you're doing an OID.
Okay, so, and it depends. Were the funds, who was withholding the interest? Because
the bank who was withholding the interest in 2005 is different from the bank today.
Right.
Do you do the OID on? You do an OID on the original bank on their TIN number, or do you do it on the one that exists today?
Let's see. Well, how would we? I guess what caused the account to move from one bank to the other? Did the one bank acquire the other bank?
Either acquired or went into bankruptcy, and the other bank acquired the bank A.
Okay.
Bank B acquired bank A, either by foreclosure or bankruptcy.
Okay. It could go either way. I would say if you're going to do it on the current account and the account number changed, did the account number change? Or was it the same account number?
I'm thinking. No.
It did not change?
Account number, my account number did not change. The TIN may have changed. I don't know.
Right, yeah, the TIN definitely changed. If it went from one entity to another, then,
Correct.
Yeah. So in the case of the account number not changing,
Correct.
I may just do it on the current bank. And then do maybe an acquisition. If the account numbers had changed, I may do an acquisition on the old account and do an abandonment on the current account.
So you're more or less double dipping in that case?
No. Acquisition. Acquisition is because there's some other account out there with a different account number, and I want to close that account.
Right.
That's all an acquisition does.
Got it.
Okay? Because there's an asset there. I'm acquiring the asset by filing that form.
Got it. So you do an abandonment on the prior asset, and the current asset you do.
No, the prior would be an acquisition if we're closing it. If we're looking to close out an account, or we're looking to.
I'm looking to OID on an abandonment basis.
Okay.
2005.
But it changed, and I'm saying you could probably do it both ways. You may want to look at what. Like, was it for all of 2005? It was the old bank?
It was all of 2005, the old bank.
Okay. You might want to do it on the old bank, even though the old bank supposedly doesn't exist.
Correct. But then how would I find the TIN on the old bank then?
What bank is it?
Union, Chase.
Those are all still banks.
Right. But WAMU.
Okay. So these are banks that still exist.
Well, WAMU was purchased.
It doesn't matter. It's still a bank.
They're
They're still a bank. They've still got an EIN number. They're still in business. It doesn't matter who owns them.
Okay.
I could own all the stock. Are you going to put my EIN on it? No.
Okay.
It doesn't matter who owns the stock.
That was my question.
Yeah.
Thanks.
Okay.
Brandon, so question is, you had mentioned how if you have a company account or a corporate business that the funds that you're OIDing is because we as people are the signatories, or the signatures
the
is
guarantor.
what the guarantor that creates the money. So if it's a company account or a company checking account that we want to do the OID process on, do we file that with the company's 1040?
No.
On your personal 1040? Because
the company doesn't have a 1040. If your company has a 1040, you might want to look at who's preparing
okay.
your taxes for you. It's probably 1120. Or if it's a trust or a partnership, there may be a different form. But if it's a corporation, it's probably an 1120.
Okay. So then anyone who does have a company or a trust has to file it on those tax forms, not the personal forms, even if it's the person's is the guarantor.
Okay. Who was the interest withheld from? First, we got to identify the interest, right? Step one, identify the interest. Okay? Whose interest is it?
It's the people whose on the names are on the checking account.
Well, or whoever issued the check.
Yes.
Right? You're issuing a security. Even if you use your debit card, you're issuing a security. Okay? They withhold your interest from your bank account as soon as you issue that security, right?
Yes.
So that is your interest. Okay? So if that's your interest, and you're going to see, you're already do your corporate taxes however you do your corporate taxes. Declare your income, do it all normally. Okay? You're coming up from this side saying, remember the banking has nothing to do with labor or anything else. This is actually something I wanted to get into tonight too, that they're two totally different worlds. When you're doing banking, it has nothing to do what you did for the instruments or what the instruments are for. The fact that you're trading these instruments at the bank is something completely separate. How many people think that they've gotten taxed on labor? How many people here think that the IRS taxes their labor? The IRS has never taxed you for your labor, ever. What they're taxing you on is the benefit and privilege of using the banking system and using Federal Reserve notes. That's a benefit privilege. You don't want to pay taxes? Don't use banks and don't use Federal Reserve notes. Do all your contracts with gold and silver. You'll have no problem from the IRS. Well, you might get problems from them, but you'll win in the end. Yeah, do you have a microphone?
Brandon, it says that you have to have your 1099As and OIDs in by March 1st. And I'm wondering, what if, like, in June or something, you decide to collapse an escrow account? Do you have to wait till November to send that into the IRS, or can you send it any time?
You can send it any time.
Okay, so what's the deadline for?
For filing? For filing for 08?
Well, so is the deadline then to get it in order to use the 1040 to get the return?
Yes. The deadlines are there, like let's say the 1099 deadline to file with the IRS. If you're doing it by paper, it's March 1st or March 2nd or something like that. If you're doing it electronically, it's March 31st.
Right.
Okay? You have an extra month. Now, the reason those deadlines are there is because April 15th, final bookkeeping. Everything must be accounted for. Okay? Does it mean I can't file 1099s throughout the year? No. Especially, and I really recommend this, who listened to the Tuesday night conference call? I suggest everybody download the Tuesday night conference call and listen to it. Okay, we went over some very important points about filing electronically versus filing via paper forms. See, filing electronically, you get feedback. You know that your stuff went in. Whereas you file by paper and it gets tossed because they think there's something wrong with it, you'll never know. And that'll cause you to get a frivolous filing. Okay? So I really recommend getting on the electronic system and figuring that whole side of it out. Not to mention it gives you an extra 30 days to get all your stuff in and done.
Somebody mentioned on there that other source for the website for the forms that you didn't like. I think you talked about your last. Remember that?
Oh, the software. Did I answer your question?
Yeah, so basically I can just, throughout the year, I can file any time. Doesn't matter.
Yeah. You want it to get processed, you may want to mark it corrected, but that's neither here nor there.
So if you go ahead and get a 1099A from a mortgage company because they foreclosed on your house, and the market value is less than the amount owed,
right?
And they mark no, are you liable?
No. They're doing an acquisition if they mark no.
Right, but what if they don't follow it up with a 1099-C?
Then there's probably going to be an account that they're going to try to attach to you, or they're going to sell the debt to a debt collector. So you'll be getting a notice from some attorney / debt collector who's going to say, hey, you owe us 30 grand. And that's if, actually, no, they'll tack on like 10,000 in penalties and probably 20,000 in interest,
Yeah.
knowing the debt collectors.
And so basically when you file it, is there something you're supposed to do when you file it on your 1040?
No. Actually, I was talking to an accountant today, and now you may want to look into this. The accountant I talked to today said that when there's a 1099-A and I'm the recipient of it, that's not really a taxable event until it's followed up with the C. Okay? Because the C is what says they're canceling your debt so you have income. The A just says somebody took your shit. That's all it says. Why do I get taxed on someone taking my shit? Okay? So, anyone else?
Yeah, Brandon, you mentioned Federal Reserve notes and bank accounts being like a public benefit.
Yes.
The W-2, I believe I heard Jack Smith state that if you use exemptions, that's also a public benefit and you're a debtor.
When you're filing a 1040, who's the debtor?
You.
The corporation is.
The corporation.
Okay? Remember, and the method we've been discussing, you're a debtor, no matter how you look at it. Okay? The fact that you're not prepaid and you haven't closed and cleared all of the straw man's accounts, you're a debtor. Now, we haven't got, who's, okay, let me ask this question. How many people are on the Monday night downloads now? Oh, man. Monday night downloads, Jack Smith? Oh, you guys. No, I'm busy. I'm too busy to listen, to take 3 hours out of my week. Okay. Everybody should be on the Monday night downloads. He had a great call this week which addresses this issue. And I can't recommend anything more. That's as far as I'm concerned and as far as my awareness, there is nobody else out there giving you how to be a creditor except for Jack Smith. And he does it way better than me. You guys come to see me, that's the guy to listen to. He really knows his stuff. He really comes from creditor all the time.
Are they recorded?
Yeah, they're recorded.
So I'll listen to that one. So what would you put? 0? Exempt?
If I were filling out, doing this process that we've discussed over the last couple weeks, I would mark my file. See, if you mark 0 exemptions and you still have a filing status, guess what? They're going to give you your exemption that you forgot to put in there, and they're still going to tax you.
Right.
Okay? The fact is, you're filing as a debtor. Take your exemption, do your deductions, take those benefits and privileges. Whose benefits and privileges are they? The straw man's, the corporation.
Okay.
He's the one taking all the benefits. He is a debtor. Okay? Until you've brought him out of that. And that's what he discussed. He did last night's Monday night download was or this week's, I should say, awesome. Because he was discussing, you want to go from your straw man being the debtor to bringing him outside of that system and making the straw man a true creditor. That's a completely different process than what we've been discussing. Okay? Now, and it is beneficial, but you guys need to learn how to be good debtors first and at least start acting like creditors as far as from the private side before you can move out. Because before you can move out of the system, not only do you have to know it, you've got to clear all your debts. Remember in 1859, what happened? Southern states tried to leave without paying their debts. They got the shaft. Okay? You can't leave. You can't get out of the system without paying your debts first. And you know what? Every account you've ever opened is still open. And you're a debtor. Okay? Microphone to the back.
On your credit sheets, is that where you find out where all those openings?
Not necessarily, because they fall off your credit report after a number of years.
Is there a place that all of your accounts that you've ever opened up your whole life is registered? I mean, you know, I mean,
DTC. I don't know. Maybe.
so you just have to go off your personal, records in your mind and do some.
Yeah, there's a process. There's a process to closing up and becoming a creditor, settling all debts on the public side.
Oh, okay.
There's a process to it.
Will we be covering that in the future?
Yeah, we will. That's what we're working towards. We're kind of doing a progressive kind of class here, where we learn how to first settle all our debts with this method, learn how to be good debtors, as far as the straw man's concerned. Once you're operating, and we're also learning how to take this into the community. Okay? So this is a simple method. When you start getting into the becoming a creditor, guess what? You cannot deal with the public system anymore. And the only time you ever would be without recourse on your signatures, which does not tie you in as a debtor to that document or that security. Okay? Interesting little thing I wanted to bring up, and I think those of you who come from the Patriot movement may find this interesting. I was watching a special on the History Channel the other night on Abraham Lincoln, okay? And Abraham Lincoln, there was at one point in the episode, the whole show wasn't about this topic, but in this particular part, there was one gentleman who was arguing that Abraham Lincoln was a racist, and he was a racist because of point 1, point 2, point 3, and point 4. And on the other end of this argument, they had a Supreme Court judge saying, no, he wasn't a racist. You have to take into consideration the political and all these other aspects. So he had his points. The most interesting thing I thought was they were arguing back and forth about the Emancipation Proclamation. Okay? Emancipation Proclamation, he said it didn't, the one guy was saying it did not free the slaves. If you read it, it doesn't free the slaves. And the judge says that's not what the document was meant to do. The document was, remember, what is the president in relation to the military? Commander-in-chief. And when you're the winner in a war, don't you have the right to take the enemy's property? And that's what he did. The Emancipation Proclamation had nothing to do with freeing slaves, had everything to do with confiscating the enemy's property. Okay? So, now, everyone knows the original 13th Amendment? No titles of nobility, right? And then when we created the new federal Constitution, we had a new 13th Amendment, but this is now the democracy, but in that 13th Amendment, no slavery, right? Okay. The original Constitution protects slavery. Okay? So, those of you who want to go back to the constitutional law, pre-democracy, slavery is still protected. And in fact, that's what the foundation of international bankruptcy of nations is founded on. Your nation is a slave to the creditor. Okay? That's why slavery is still protected over in jurisdiction A. Okay? So keep that in mind. Jurisdiction A, slavery is protected. Creditor has all the rights. Debtor has no rights. Okay? So I thought you guys might find that interesting. And
what was emancipated again?
What's that?
What was emancipated again?
The Emancipation Proclamation was a confiscation of property.
Would that also include debtor's prison?
Yeah. In jurisdiction A, debtor's prison is still protected.
Hey, Brandon, just some details about the dealing with this in the checking account.
Mm-hmm.
I went through my statements, and I do have the checks returned to me. We've talked about how the bank uses that to sell eventually to the Fed.
Right.
And
well, it's not the physical check. Okay? I don't want you guys to think, oh my God, I got my physical checks back. Did they withhold the interest?
Yes.
Okay, when they gave you the check back, did they give you the interest back?
No.
No. So there is still an asset out there that is matched up with that interest.
Good.
Okay? So just because you got the physical check back, there's still an escrow account with your interest in it.
Great.
And that's really what you're claiming back. You don't need the physical checks.
Okay,
but that may be why they're keeping them.
Something else. Then in the sequencing then of the A's over multiple years, can you kind of give us a rundown on claiming it? Do we need to claim the amounts for 05 in 06? Is there a sequence of years? Like, do we need to claim the previous years in the following year, like we do our taxes? And do we need to put specific years on those A's and on those OIDs?
I think I get what you're saying, but remember, it doesn't matter when you file it. The forms always have to do with the year that it happened. Okay. Like right now we're in 2009, but all the tax form you use are 2008 because you're reporting shit from 2008. So even though it's 2009, if I'm reporting stuff from 05, I'm going to use an 05
You will
form.
be in 05.
Not an 06, even though typically we do our reporting and accounting in the following year. You don't use this year's forms. In fact, I think that's probably why the IRS doesn't even release 09 forms until after April, because they don't want you to get confused. Right. They don't want you to think you're supposed to use a 2009 1040 for your 2008 return.
Okay. Good.
Is that for both forms, Brandon? A and OIDs?
It's for all forms.
Okay.
You mentioned before the accounts falling off your credit report after, 7-10 years or so. How would you find out which accounts fell off so you can close them all and become a true creditor?
You don't necessarily have to do this process to clear up all your public debts. And when we get into that in dealing with the DTC and all the forms that go along with that, there's a very important form that will go along to kind of like whatever I don't know about and I haven't already taken care of, this will handle it. Okay? It's the GSA. It's a GSA form. Okay? We'll start getting into the GSA forms. You may have heard of them on the internet. I don't know how many of you have researched commerce, but you may have heard of Standard Form 28, Standard Form 30, Optional Form 90, Optional Form 91. These are all GSA forms that will become useful for you if and when you want to get out of the public system and truly be a creditor over on the private side. Okay? Yeah, you don't want to don't use those forms for anything else. Because there is a lot of stuff going around the internet right now about those forms and the use of these forms. It's getting people into a lot of trouble because they're not using them correctly and they're not using them in the right situation. People think they can use the Form 90 or 91 to just release the liens on their property. And if they haven't set themselves up as creditors and done all the other work that's required to use those forms, they're ending up in jail, a lot of them. Yep. Okay.
So I just want to go back and clarify the 1099A and OID year that we're reporting.
The year that you're reporting is the year of the form. So if you're reporting stuff that happened in 06, you use an 06 form.
So when I'm using the Fire software and I'm filling out my 1099As, and it says there's a check there. It says, are you filing for prior years?
Yes.
On the 1099As, the software tech walked me through correcting me marking yes.
You have to use yes on everything but 08. Because even though we're in 09, the current accounting year that the IRS is currently doing the accounting for is 08.
So I would have to fire a separate form then with my past ones on there because it doesn't let you single out 08. It was just, it literally, he called it.
Yes, definitely. You cannot group 05, 06, and 07 forms together and send them all in together. You can't do that. You shouldn't even do that with a 1040 or 1040X or anything else. Whenever you're doing by year, you group a year together and you send that year in. You don't ever group 05s, 06s, and 07s and 08s. Don't do that. I'm sure if you did that, I'm sure you got a bad on your electronic file.
Before I got the bad, though, he was walking me through it and said that the format's off. So I was just trial and error because I've never even done my taxes before. So I'm just like in the deep end of the pool here.
Yeah, no, I actually had that same problem. I didn't notice that little yes/no box for prior year, and one of them came back bad. I'm like, what? And I'm like looking at it, and I'm going through it. I'm like, this is right. I'm like, what's wrong? And then I figured out, oh, you got to mark that yes. And then and the only thing that changes in the actual text files you upload
is a P.
P. Yeah.
In front of your Social Security number.
Yeah, it puts a P in there. So you can actually open up the file and manually put an uppercase P, and you'll be fine. Any other questions? All right. Touch a little more on banking and labor. Remember that everything that you're doing at the bank, you're acting as trustee for your corporation doing banking. Okay? Remember, the IRS has never taxed you on your labor. They tax you on your banking. Okay? So keep that in mind. When you endorse a check and deposit it, has nothing to do with where the check came from or anything else. The fact is, you're now doing banking, and you have interest in that instrument. Anything you do at the bank, you have interest in it if you're creating it, if you authorized it. So whether I endorse a check and deposit it, or whether I write a check or use my debit card, in every case, I'm acting as a banker. Has nothing to do that I use the debit card to buy groceries. Leave the groceries out of it. Has nothing to do with the groceries. Has nothing to do that I got something for using the debit card. I'm banking. I'm creating assets in the bank every time I do this. Every time I write a check. Every time I use my debit card. You're creating an asset, creating an asset, creating an asset. Forget about what is happening outside of the banking system because they don't care. It has nothing to do with banking. Okay?
Brandon, I was trying out a little experiment a while ago, and when I endorsed my checks, I had a stamp that said for credit to account or exchanged for equal amount of Federal Reserve notes as face value. I put that on my check.
Okay.
And the legal department closed my account. So, since we're talking about banking and endorsing checks and Federal Reserve notes, maybe you could offer a little bit of comment on that?
Now, give me the statement one more time.
I'm trying to remember the verbiage. It was for credit to account or exchange for Federal Reserve notes of equal value.
Okay.
For deposit or credit to account. So I was treating it as a credit.
Right. Okay. The problem that they may have with that is that you may be isolating the interest in some way or creating a situation where there's no interest to go over on the liability side. So you may have cost them money because the only time they can put your interest over there is when it's been okayed through the Federal Reserve.
Right.
It's been okayed. Now you have your interest in those funds. So basically what you may have been doing is creating a situation where they can't withhold your interest from that instrument. Because remember, I endorse the check, I deposit it. I've done banking. Has nothing to do with the source of the check. I've done some banking. I've created value. Now, for them to withhold that interest, I had to okay the withholding of that interest. So when I write a check, if I write a check for $100 on that $1,000 deposit and I send it in, maybe they can't withhold my interest now because of that statement you put on the back of that check. They're like, oh, and so they close your account. Because, think about it. At that point, you could just write infinite amount of checks and your balance is never going to go down because they can't withhold your interest.
It was when I was depositing, let's say, a paycheck or somebody paid me for something, and I would put it on the back. And incidentally, I was reading somewhere that the IRS cannot tax that. It's not considered income. So there's something there with the IRS and the fact that they can't, use your interest. It was interesting. I didn't know if you had any comment on that.
So you're saying when you use that statement on the check, they can't tax it as income.
It doesn't count as income.
Then I think that backs up what I already said.
Exactly.
Yeah.
Okay. Cool.
Because they can't withhold the interest.
So we're not using that in this process, obviously.
No, I wouldn't suggest it.
If you endorse the back of a check from somebody else, is that considered the same as signing your own check as far as it creating money?
Okay, if when you say somebody else, like somebody else wrote you a check and you endorse it, is that the same as you writing a check? You are banking in either case, and you are deposing yourself of the funds, so it could be considered the same because in either case, you're authorizing the creation of funds. Now, if somebody else wrote you a check and you endorse it, their interest is going to be withheld, not yours. Because you endorsed it, you now have interest in that asset, because what happens is you deposit in your account and they give you $1,000 on the liability side of the account. That's your interest in that asset. Okay?
If you use cash to get a money order, say through the postal service, to pay a credit card or a student loan, whatever, is that OID-able? Or is that gray area?
It is kind of a gray area, only because when you created the asset by filling out a withdrawal slip or going to the ATM and using your card to withdraw the cash, the interest is now in your hand.
Double dipping?
Not necessarily. It just may be reported differently because you're holding the interest in, but then you take the interest down to the post office. So you're giving it to the Treasury. That's why a postal money order is actually the only real money allowed in this country. It's actually backed by something. That's the only money that's backed by something. And it's because you're dealing directly through the Treasury via the Postal Service. So you basically took your cash and took it to the Treasury. You took it out of circulation.
Is that why you can't buy a postal money order with a bank card?
You can. I've bought postal money orders with just about anything. I could probably take stamps in there and buy it. Well, you do anyways if you take Federal Reserve notes. Anyone else?
Is that a yes or no, or
I'm sorry. What was the question? I already lost.
Is it OID-able, or don't?
It could be, but it may be a different approach. That's my answer to that. So, for instance, if I take cash out of the bank and I walk down to Walmart and I purchase a TV with that, I had the interest. So I'm not going to say the bank withheld my interest, but I brought the funds to Walmart. So I would probably do some kind of a reporting on Walmart for those funds. You see what I'm saying? Because now they're withholding. Remember, we live in a bankrupt society. Everything's prepaid. If I'm handing over my interest, that's banking. Has nothing to do with the fact that I got a TV out of it. Okay, remember that. Always take the physical out. When you're doing banking, it's just banking. So even if I give the Federal Reserve notes to Walmart, that's my interest. So that's a reportable event, but it's not the bank that withheld my interest in that case.
But the bank's reducing the balance.
But I'm holding it in my hand. You see, the bank may reduce the balance in writing of a check or anything else, but I don't have the interest anymore. It's not in my hand. Whereas if I took out Federal Reserve notes, yeah, they reduced the balance, but guess where it went? Into my hand. Okay? Now, I'm not saying that an asset wasn't created. I'm just saying, what are we reporting? And what we're reporting is the withholding of interest. And the fact is, if you're holding the interest, it hasn't been withheld. Okay? Careful. Don't break my microphones.
Brandon. Last week we talked about a car being totaled and then being paid off by the insurance company, but yet that original loan was still an OID-able event.
Okay.
And do you remember that conversation?
Kind of.
Okay. So what I'm wondering is, because technically the insurance company paying it off is like as if you paid it off out of your checking account. I mean, it's still, it's like even if you...
Hold on. Yeah. I don't know if I'd say that. So what are you reporting?
Well, you're reporting on that instance, even if the car loan was paid off, there's still an escrow account that's being held by the original financing company for that auto loan.
Okay.
That's what we talked about.
What are you trying to achieve?
What I'm actually.
I want to hear this song and dance. What are you trying to achieve? You're trying to get your money back, right?
From the original loan, yeah.
From the original loan.
Yeah.
So how are you trying to get it? Are you trying to get back the payments you made on that loan?
No.
Okay, because how would you do that?
Through the bank.
Right.
Right.
Okay.
No,
So
separately
you're trying to get your initial deposit of the promissory note.
Correct.
Okay.
The credit that was issued.
So does that have anything to do with the insurance company?
No.
Okay.
So my question, okay, but that's not my question. My question is when you're dealing with a house refinance.
Okay.
Is that the same thing as like when the second bank comes in and pays off the first loan? Is that the same thing as the insurance company paying off? Oh, that's what I thought. Okay, I wanted to clarify.
But, however, if it was your insurance company, chances are you underwrote that amount. Right. But so they're basically, the insurance company is handing over your interest.
You paid for.
No. Remember, you created an asset with the insurance company.
Right.
Okay?
Right.
Your interest, just like when you deposit a promissory note, your interest goes to pay off the seller. Okay? When you did whatever you did for your insurance, you got an asset over here, and your interest is here. Now, what probably happens in an insurance situation, there's a claim, and you probably have to sign something in relation to that claim. Right. That's going to be the asset, because I bet you the dollar amount's on there. It's like, this claim is for $100,000, and you sign your name to it. Boom. You just created $100,000. But the insurance company doesn't get to keep it. Right. They'll hold on to the asset, but the interest is going to go to whoever it goes to. Okay? So you authorized and you created the funds, but the insurance company is kind of like, well, we didn't gain from that. Okay?
So in her situation with the car loan, if it's already paid off or closed, how do you get back the original amount of that promissory note?
In the case of a car loan, and it's been paid off, how do you get the original amount of that promissory note? Well, what's the three-step process? Okay. It'd be no different than what you do on any other interest that's been withheld out there. Because remember, what happens when you sign a promissory note? It's just like depositing a check.
So is that subject to the 36-month rule?
Yes. Yes.
Okay.
So if you got the loan before 05, you're not going to get anything out of that. I mean, at least the IRS won't return the interest to you. Now, you can report it, and it may do something for the books of whoever you're reporting it on, and the IRS may do some shuffling of some accounting in the background, but you're not going to get a return of those funds.
Going back to the bank account, if there was multiple signatures to that account, am I able to OID even the amount that others have taken out, signed on?
Are you able to OID it? Okay, you're a guarantor on the account?
Yeah, I opened the account.
Okay, so if you're a guarantor on the account, are you the only guarantor on the account?
I added people on there.
Are there Social Security numbers on it, or are they just signers?
They had to bring in their Social Security number.
Okay, so there's multiple guarantors on the account. Okay. So you want to identify the interest, you want to claim the interest withheld, and you want to claim a return of the interest, right?
Yes.
What is the only thing in your case that could prevent you from reporting that and getting a return?
They reported to.
Yeah.
Okay.
So yeah, if I wouldn't recommend all three of you reporting all the money that went out of that account. Not a good idea.
Okay.
But if Joe's going to do these parts, I mean, realistically, only one person should do one account, in my opinion.
In fact, that's what it's looking like. It's just one of the things, I guess, that internal part of you going, am I getting greedy here?
Right.
That's the...
Yeah, and you don't have to claim all of the assets.
Oh, okay.
There's nothing that says you have to claim them all abandoned. Just like the lender on your house loan, they didn't have to file an A on you and claim your property abandoned.
Okay.
But they did.
So, is it greed, or are you just putting it back into the system and becoming a bigger?
I wouldn't say, okay, for one, got to know what you're doing. If you know what you're doing and you're not coming from greed, you're helping the system. Okay? You're reducing the public debt. That's where you should be. That's really what you should be looking at is how do I take responsibility for a healthy economy? Because it's irresponsible for me to do something that's going to damage the economy, that's going to increase public debt. That's just irresponsible. That's not being a creditor. That's being a debtor. So if you're truly, your come from is I want to be a creditor, I want to be responsible, then I think you'll be able to easily find those things that like, am I being greedy or am I being responsible? Because they are two totally different things.
Okay.
Okay.
One other thing was just basically, I knew I swiped stuff on the card, and they swiped on their card. So same thing as far as signature. IDable. Okay.
Yeah. And what's going to happen is when that A and the OID and the 1040 go in, you've now associated all the transactions in that account with someone. Okay? Nope. Alrighty. Where are we at? 8:30. You want to do a break? Wait, hold on, before we get loud and crazy. Anyone on the phone have any questions or anything you want to address based on what we've been talking about? And remember to talk. Here, I'll just unmute you all so you can speak. Anyone on the phone have anything to add or ask?
Yes, this is Camille.
One at a time.
Brandon?
Yeah.
Hey, it's Michelle. Okay, we couldn't unmute ourselves, just so you know.
Okay. I thought maybe that was the issue.
Yeah. I have a question for you. My property, I had an investment property, and it went into foreclosure, but the day before the foreclosure, the bank agreed to accept a deed in lieu of foreclosure. But they haven't actually sent me the paperwork to do that yet. I was wondering if I could file a 1099 on the promissory note before they did that.
I had a hard time understanding what happened. Can you... Wait, did you hear that?
Okay, sorry.
Hold on.
The bank sent her
A deed?
in lieu of foreclosure to grantee. So the bank gets the grantee, so she's no longer on the grantee? That's my understanding. In lieu of foreclosure. In lieu of foreclosure.
Okay, so basically a quick claim deed?
No, they were going to foreclose on her, and the day before they said she could do a deed in lieu of foreclosure.
Yeah, they're like, okay, instead of us having to go through all this trouble and attorney's expenses, how about you just sign this for us, and then we'll make out like bandits and okay. So now I understand the situation. So what's the question in relation to that?
The question I'm asking is, because they didn't give me the paperwork to sign the property over to them yet, and now I know about this whole process, can I just claim my interest back in the note that I signed on this property?
You can claim your interest back no matter what happens. The fact is, it's your interest. So whether you sign the deed, whether you don't, whether they foreclose or they don't, it's your interest. Claim it back. She could do either one.
What if I want to keep the house too?
Oh, you want to keep the house too, huh? Then there's a couple different ways. You can claim the interest, or you can do an acquisition on the account.
What was the last part?
Do an acquisition on the account. Those are your two options. So you can do the 3-step process of returning your interest, or you can do the acquisition on it, and it'll be done.
Okay, so if I get to return my interest, then whatever I signed the promissory note for, that's back?
Yeah, you get that back.
Okay. If I do the acquisition, then I just get the house.
Yeah, and the account will be closed.
And they can't come after me for the money?
No, you've acquired the asset. The fact is, you loaned them the money in the first place. They withheld your interest and paid the seller. So, I don't see it as you'd be hurting them. You'd be helping them more if you probably, actually, you may be helping them more if you did the abandonment, got the return, and then paid off the note. Because they can't touch your asset. Don't touch my asset.
They can't touch it until I sign that paper, right?
What's that?
They can touch it once I sign it, though, right?
Oh yeah. If you sign over your grant deed to the bank, you have no more rights in that property. You've signed over all your rights to that property.
Right.
You're basically, by signing that, you're removing your lien on the property. That grant deed is your lien on the property. Fact is, there's two signatories on it. The person who sold the property, the person who bought the property. The only two people with an interest in the property. Every other lien is secondary, okay, except for a commercial lien. But even the deed of trust is secondary to your grant deed. Okay. Any
Brandon?
Yeah.
Would it be too late to 1099A a mortgage that was created 3 years ago this January? So like last month, three years back from last month, would it be too late to 1099A that mortgage?
That's 06, right? Is that 06? Whether it's 06 or 05, you have till April 15th to file on anything in 05. The 3-year, right now, until April 15th, we're still in the 2008 accounting year as far as closing up the books. You have 120 days to close the books after the calendar year ended. That 120 days culminates about April 20th. They give you that. They want everything in or mailed in 5 days before so that they're sure to have everything by the end of the accounting period, which would be April 20th. So you have until, if it's 06, you have until April 15th of 2010 to get a return of that interest.
Okay, I thought that after 36 months, the bank would claim it abandoned and be able to do that.
They will, but they have to wait till the accounting year is until all the books are done. Okay, all the books aren't done until April 15th of the following year. So
okay,
even though
a little fuzzy on. I guess I just have to do a little more studying. But in abandonment and acquisition, it seems like to acquire something means for it to become mine. But yet, when I abandon, file an abandonment on on security instruments I've written, whatever, or bank accounts, then it seems kind of weird. Like it almost seems like I'm saying that I want to abandon them instead of acquire them.
If you're the borrower, if you're the borrower, then you're abandoning. That form is okay. In either case, the property's yours. Whether you're doing an acquisition or an abandonment, it's the lender's property. Okay?
Okay.
So, in the case of an abandonment, all you're saying is, yeah, that's my property, and they owe me money for it. In the case of an acquisition, you're like, hey, that's my property. And that's it. That's really all you're doing. Hey, that's my property. And now that you've identified it as yours, they can't hold it anymore. They're like, damn. We got to take it off the books. It's his. And he reported to the IRS that it's his.
I guess that's kind of what the lady prior to me was she was kind of alluding to, I guess, too. You can't do both an acquisition and abandonment on the asset, right?
Yeah, you don't do both. You're either, because the only difference is between an acquisition and abandonment is they have to pay me back or they don't have to pay me back. Fact is, it's my asset. Either way, whether I'm filing as acquisition or abandonment, it's my asset. Acquisition is saying we're square. That's my asset and we're square. Abandonment is that's my asset and you owe me for it.
Okay, great. Thank you for the clarification.
Okay, this is Camille, and my question is that I sort of have conflicting now ideas in my head about checks being returned from the bank, the original checks, that who owns the interest, and I thought it was stated that I now have the interest in them, but did I just hear you clarify saying that because I did sign these checks that the bank still has interest in them?
No, you always have an interest in them. You created them. Remember, you gave them the privilege of using their banking system. You showed up and you started writing checks and depositing checks. You're banking. The only way they survive and exist is because you're banking. Okay?
Right.
So you always have an interest in everything you do in banking. Everything you do, whether it's endorsing a check and depositing it, writing a check, using your debit card, you have an interest in every transaction you partake in. So it's always your asset in every single situation.
Now, have these assets been abandoned if the original checks have been returned to me?
Remember, it has nothing to do with the check. The fact is, did they return your interest when they returned the check?
They returned my interest.
No, did they? Did they return your interest?
I thought they did, but now I thought I heard you say tonight that they did not.
If they returned your interest, then you would have got a deposit in your account or some cash to go along with that check.
All right, so then I can put them in my 1099 and include them.
Yes. Because they never returned your interest. That's the fact. It doesn't matter the receipts, the checks, the promissory notes. The paper that's floating around has nothing to do with the interest. Those are the assets. If the interest was withheld, that's what you're concerned about. The assets can go wherever they may go. Okay? And typically they're not even held by the bank who you gave it to. I mean, those things are traded, bound together with a million other instruments, and sold on the open market. Okay? So you're never necessarily, you may not ever see the asset again, but the fact is the interest is what you're getting a return of. Okay? Remember, in the public, what is the only thing we can deal in? Debt and liability and interest. That's the right-hand side of the ledger. Okay? Left-hand side of the ledger is assets. We're not allowed to use assets in public. Okay? Assets are always held on the private side. Even in a court case. Remember I told you courts are banks? The original complaint or the original indictment, that's the asset held in judge's chambers. Judge's chambers is the private side of the account. The public side of the account is the interest. And everything that's in the public files for that account is on the right-hand side of the ledger. Right-hand side of the ledger. No, because the grant deed is an interest too, because what did you do with the grant deed? It would have been, if you'd have kept the grant deed and you had the original at home, you'd have legal title to your property. Nobody could touch it. Because you have proof that the guy who had it before signed it over to me, it's now mine. But instead, you took it down to the county and filed it there, and now they got legal title. And now it was shifted from one side of the ledger to the other. You shifted it from over here in the private to the right-hand side.
Because it's been filed.
What's that?
Because it's been filed. Now the light bulb went off.
Yep, because it's been filed. It's in the public now, so it's on the right-hand side of the ledger. Yep. And remember, everything on the right-hand side is always interest. Remember we were talking about UCC filings? What are UCC filings? Notices. Notices of interest. Interest is always on the right-hand side of the ledger. So your UCC filings, they get filed in public. But whatever supports that UCC filing is held over on the left-hand side of the ledger in private. So if you've got some kind of a claim, you hold that in private. See, you got to think of your corporation operates on ledgers too, not just the bank. You got your own ledger that has nothing to do with any banks. Everything you file in public is over here on the liability side. Everything you have that is in the form of a claim is on the private side. Okay? Is your microphone on?
No, now it is.
Okay.
So I just had a quick question going back to the woman that was talking about the foreclosure. So, for example, on the 1099A, and you have the amount and then the fair market value, where you're not thinking of the thing, right? You're still just thinking of the interest she created when she created the promissory note. So, like, if she created a $500,000, loan, then the fair market value would still be $500,000. You wouldn't have to look at the value of the house,
yeah,
right?
It's the face value on the instrument is the fair
I just
market
wanted to
value.
verify.
I mean, that's like taking a $200 check and going, oh yeah, that's only worth $150. It says who? No, it's worth $200. It says $200 on it. So if I sign a promissory note for $500,000, its fair market value is $500,000. I don't care what they're selling it for and whatever they're doing in the background. That has no concern to me, because in my bank and in my ledgers, it's $500,000. I got a $500,000 interest. I don't care that you sold it for $3. I still have a $500,000 interest in it.
Great. Brandon? So then what would you put in the box where it says description of property on something like a mortgage, promissory note, or a car loan? What would you put as the description of property? Yes.
Description of property, I would put, personally, this is what I would do. I'm not suggesting any of you do this. I would put instruments, and I would put the S in instruments in parentheses. So it could be instrument or instruments issued on account number 1, 2, 3.
For the mortgage, you wouldn't put the house property address.
Whoa there, Tiger. Think about what you're doing. You're identifying your interest. Okay? You identify the property. You expect the IRS to what? Go grab the property and return it to you in the mail? Say, okay, here's the house. We brought it to you, and there you go. Okay? Description of the property. You're identifying the interest. Okay? So instruments issued or credit issued on account number whatever. Any other questions on the phone before we take a quick break?
Hey, Brandon.
Yeah.
It's Carlene. How are you?
Good. How are you?
Good. I have a question about the OID, the 1099 OIDs, and the using the FIRE software. And let's say you're going back to 2005, but I believe that the only available year is 2008. So can you go back and do 5, 6, and 7 on the 2008 form?
You said in relation to the FIRE software, right?
Well, that's the software that I'm using.
Okay. Well, then forms have nothing to do with it.
Okay.
You're gonna mark the year to be whatever year it's in. Oh,
okay.
Did you print it and it came out printed as 08?
Yeah. Well, I have.
That means you need to go to the welcome screen, the first screen when you open the program. There's a little drop box that has years in it. You have to change that year to the appropriate year before you go to the OID screen and start printing. You don't change it on that initial screen, you're going to print 08s all day long.
Yeah.
So, but it doesn't change the generation of the text files. When you generate the text files, which you're going to be uploading, you're going to be doing that. You have to make sure that when you hit that big fat button at the top that says File Information Returns Electronically, when you hit that, it brings up a separate interface. And then down at the bottom, it's going to say, okay, where do you want this text file to go? It's going to have up at the top in the left-hand corner, what year is this for? If it's anything before the year that is currently being reported, meaning any year before 08 in our case, it has a drop-down box for, is this a previous year's filing or prior year filing? You would mark that yes.
All right.
Okay? And I think that's really all you have to really be concerned about. That when you're printing, you have to change the year on the welcome screen. When you're generating your files, you have to make sure you put the year and mark it yes if it's a prior year.
Okay.
Okay.
And then one more question, Brandon.
Uh-huh.
If I do 2005, do I have to do 2006 and 7 and 8 now? Or can I just do 2005 and when it's time to file again, do the other years?
Yeah, you can do it however you want.
Okay, so you don't have to do it one after the other all at once?
No.
Okay.
Okay, that's it.
Okay.
Great questions, Carlene. Thanks.
Thank you.
So one more. She's my roommate. We're trying to figure this fire software out for the last week. So the clarification on the box for description on the fire software that we found is that you're only allowed 39 characters. So I just wanted to be clear with people who are using the software to make sure that they use shortened, abbreviations for the word instruments. And
are you sure that's not per line?
Well, it does run off.
But you can run 2 lines
Right.
of text. You know that?
No, I know, but it was 39 characters total in the 2 lines. Everything else was truncated according to him and the IRS file.
Lots of rumors flying around. We just want clarification. So we will get it confirmed with the fire software folks, but just to take notice of that, and when you are completing your forms, just those are the types of things that you want to check so that they don't get marked bad. Yeah.
Yeah, well then.
Instruments, shorten instruments and then shorten the word deposit. So that's
you could change instruments to credit.
Yeah, perfect. So just to be aware of all that stuff we're working on.
And realistically, instruments issued is really for description of property. Account number is redundant because the account number is already marked down at the other side of the form on the bottom of it. Yeah. So credit issued. Instruments issued. Remember, there is no oh my God, what's the right way? What's the wrong way? What's the way that's going to work? Just make sure whatever you're putting in there adequately describes what you're claiming. Turn that down, please. Okay. All right. Any other questions before we go to break? One more. Wait. Microphone. Pass the microphone. Oh, there it is.
So for the 1099A, do we have to accompany the 1040 when you file the 1099A?
No, not if you're doing your initial filing on the 1099.
Yeah.
And you don't, in the 1099A copy C, which you keep for your records, you don't have to send that in with your 1040. Okay? You got to know that when you're filing your initial 1099, it has nothing to do with your 1040. Okay? You got to get clear in your head. I'm doing information returns. Information returns are their own thing, their own animal. Now, if as a result of the filing of those information returns, you're going to be claiming interest over here when you do your 1040, you will need the proper records to go along with your 1040. So you may need copy B for the recipient of any OIDs, and copy C of any 1099As would go into your records. But the 1040 is over here on this side. Has nothing to do with 1099s going in over here. Okay. 2 totally different worlds. Okay, now as a result of the 1099 filings, you may have something that comes over here on your 1040, but they're 2 different worlds. Keep them separate. Okay?
Yeah, I've always had an accountant do my tax returns, and I think it would be a pretty big chore to explain this all to him.
Not if you adequately understood it and could really describe it with the flow of money and the banking. I mean, I guess he'd have to understand banking enough to be able to follow you on it, but there are accountants who are doing this, who are doing exactly what we're talking about because they understand banking enough. But accounting degrees don't really necessarily mean you know anything. I mean, you could go to junior college and take 5 classes and be an accountant.
Well, the reason I ask this question is because would it be better if I'm going back, 2005, 2006, or anything like that, if I just get a TurboTax type of thing and just do it myself?
Yeah, because when you go to fill out the like if you went to TurboTax.com and you started filling out your 1040, as soon as because remember, you're going to have your records, your copy Bs of your OIDs. As soon as you go, I need to add a 1099, it's going to ask you, what kind of 1099? You're going to mark, it's an OID. And then it's going to go, okay, who's the payer? What's the payer's EIN? Who's the recipient? Well, it knows you're the recipient, so I guess it's not going to ask you that. What's the amount? What's the amount withheld? And then it's automatically going to generate a Schedule B and list it on the Schedule B for you.
So that might be the simplest way to do it anyway.
Yeah, if you don't know how to do, I mean, to me they're not that hard. I fill out tax forms, but I've had enough experience with them that I know that I feel comfortable doing it. If you've never done your own 1040s, you might want to, to go through TurboTax, because TurboTax is at least going to fill the form out correctly, but you got to know going in there what's been withheld, what your filing status is, your exemptions. If you're going to do deductions, make sure you've got that all worked out, because TurboTax will put it all together for you. It'll fill out your Schedule A with all your deductions. It'll fill out your Schedule B with all your interest income. It'll put everything in the right line number on your 1040. So it is a good practice, especially just to figure out, okay, where does withholding go? Because you'll know when you enter the withholding and it ends up over on line 64 on page 2, you're like, oh, that's where withholding goes. So it'll show you where everything goes on the form. And it's not like TurboTax just kind of brings up a form and you fill it out. It's intuitive. So it's asking you questions to kind of get you there. So.
Okay, and also can I do like an LLC on TurboTax? And
you have to check it out. I'm not sure if they do 1120s. Anyone know they do 1120s on TurboTax? No? Unaware? Okay. Not sure. Check it out. Let us know. Can you guys pass on the microphones before we take a break?
You'd have to get a certain version of TurboTax to do that. They have different professional versions to do that.
Oh, you do? Okay. So did you hear that? There's a professional version of the software which will allow you to do that.
LLC,
yeah, there's a
Corp, C
professional
Corp, blah, blah, blah.
version of the TurboTax software that will allow you to do that. All right. Let's take a 15-minute break. Reconvene at 9:10. Wait, is that right? It's 55? Yeah, 10:15. Okay. 9:10.
Can you check your calendar to make sure I'm on the schedule?
Brandon, could you just re-clarify as far as, I don't know if people here have property or if they're considering getting property, about perfecting a security interest via the UCC1? Do they just look at your Baylor Bailey format and just, do they list the property on the UCC1 or say property named in private agreement X?
You could do it either way.
Yeah.
You can list it. If you do it, if you are going to do that, I would recommend you doing a county filing. Like here in California, we don't have a state form. We use the national form in the county as well as the state level. What I would recommend is putting it into the county as a property record, because you have to file it in the county where the property is. Now, this is just in California. Some states it's different, but in the state of California, when you're filing a claim on property, it needs to be filed in the county at the county level. And if you read the instructions on a UCC, there's a special checkbox for real property. The record owner needs to be listed on the addendum, and you want the parcel number, things like that in there so that it gets attached to the property. That's the only concern I would have, is making sure that you actually attach it to the property.
All right, thank you.
Mm-hmm. What's the purpose of what? That's you're registering a claim. When you remember, the UCC is a notice, a notice of something, a notice of lien typically, but a notice of a claim. So if you're going to register your claim into public, you would do that through the filing of a public document or into the public records. UCC1 just happens to be evidencing one of the highest forms of lien. You would never register a lien until it's already in place. So unless you have a claim on the property, you don't register it in public first and then go perfect your claim. You perfect your claim first, then register it in public. Yeah.
Brandon, I was listening to the Jack Smith stuff, and one of the things he was talking about is just living life from a person who is bonded or has that bond of that unlimited value or that account in place. We've talked about bonding the birth certificate. I'm still a little unclear about what exactly the benefit is and how that's utilized, how I should relate to it, what it provides. So could you talk a little bit about, that account and some of the details about that?
Sure. Oh, yeah, I'll mute those on the call.
You are muted. You are unmuted.
That's right. Okay. Let's see. Okay. All righty. So, first step, what do we do with the birth certificate?
Set the value.
Okay, and what is that doing? Reversing the trust. Okay. So if I take my birth certificate, yeah, it's just like that. And I do an accepted for value on it, and I put my info on there. I've now reversed the trust. Okay? There was a trust evidenced by the original document. When I reverse the trust, I'm taking on role of trustee. Okay? And so as trustee, I now control the trust. I'm the manager of the trust now. Okay? So that's the first step, is reversing the relationship on the trust. I'm now the trustee. I'm now in control. I'm the one handling the affairs of this trust. Okay?
Are you also the beneficiary?
You are a contributing beneficiary. There's multiple beneficiaries, I would say. Yeah, so you can't be the grantor, the trustee, and the only beneficiary. You can be the grantor, the trustee, and one of the beneficiaries. Okay, but if you're the grantor, the trustee, and the beneficiary, it ain't a trust. There's no trust going on. It's just a one-man entity like the straw man. Okay. Well, actually, the straw man is a even the U.S. corporation, because there's multiple beneficiaries of that as well. Okay. Microphone.
Oh, sorry.
So, would it be safe to say that the public in general are the multiple beneficiaries?
The public in general are beneficiaries.
So since we're one of the public, we're one of the beneficiaries. Yeah. Okay, got it.
Yeah, I would say remember we did our private trust, public trust. I would say the public trust is one of the beneficiaries. You can't hear me? I'm garbled. All right, let me see if I need to change the battery on my battery pack. It's not showing low, and I'm getting feedback on the line. You're hearing everyone else on the microphone? It is coming out here, right? Oh, it's garbled? No, I don't think so. Maybe it's my wires are tangled here. I can hear the static now that you say that. Hello? Okay, hold on. Let me see if I can rectify this. Ready? Okay. Alrighty. I forgot where I was. Did somebody ask a question that I haven't answered? Oh, birth certificate. There we go. Alrighty. Accepted for value, we reverse the trust, we now control the trust. Okay? The bond that we send in with the birth certificate is designed to set off or discharge any outstanding liabilities in relation to the trust. Okay, remember what we said before the southern states could secede from the Union, or before you can secede from the public? You got to pay your debts. Okay? So, paying our debts. Any debts of or related to this trust. Okay? You send those together to the former trustee, or one of the former trustees, and now he's on notice that the trust has been reversed, and he's a fiduciary, which has the capacity to discharge or set off any outstanding debts and liabilities attributed to the trust. Make sense? Okay. That is the Secretary of the Treasury. What's his name? Geithner. Timothy Geithner. If you're born in a different country, what document do you have that symbolizes a trust? You have a birth certificate, so that is a trust. So you could do it with a birth certificate. What else could you do it with? What created your U.S. trust on the private side? You're a citizen, so didn't you have to get a certificate of naturalization? Okay, that was the first trust created. Yeah. That's the first trust. No, why? No, it's a good idea. Aren't you from Canada? Okay, it's a good idea. I'm just playing. Any Canadians out there? I don't mean no. I love Canadians. I don't see anything wrong with that. Again, there's a kind of a dual mentality out there. There's those who really a lot of the patriot movement, they want to be immune. They want to be immune from the government. Okay? And they see as their solution to being immune is, well, let me expatriate, let me not be a citizen. But again, that's just the same thing as the southern states going, yeah, no, we're not going to make good on this debt. We're going to go start our own country. That doesn't work. And in fact, because slavery is still protected in Jurisdiction A in the Republic, that's how you can be held as a bond servant involuntarily. Has anyone ever heard of involuntary bankruptcy? Yeah. That's slavery. You're being held the country's being held in servitude to the creditors. The democracy is being held in servitude to the creditors. Now, because of the Universal Declaration of Human Rights and things like that, they can no longer hold men and women in slavery, okay? But there's nothing that says they can't hold corporations and trusts in slavery. Yeah, there's nothing wrong with it. You're fine. Don't worry. Yeah. Canada's actually a U.S. corporation, so you're in some way already tied to the United States. You could look it up. Go to the SEC. Yeah, but you would if you were going to do this process with your Canadian birth certificate, I would do it through the equivalent of the Secretary of Treasury in Canada, which I forget what that's called. But there are tons of Canadians doing commercial processes. They're actually quite savvy in Canada on doing the commercial processes. If of any other country other than America, the Canadians are the most on top of this than anyone else.
Cool, so I could do it.
Yeah, you could do it, and there's even probably plenty of resources out there for you to do it and to learn it, the Canadian process, because they've even got the whole OID 1099A thing. They've got that figured out on the Canadian tax forms. Yeah. Somebody's handling a microphone. Okay.
She might want to check out Winston Shrout's, was
Kelowna.
it British? Yeah.
Kelowna.
BC.
Winston Shrout's Kelowna seminar.
They talked a lot about...
A lot of the Canadian system was explored in that seminar. Okay.
So, he's now the fiduciary.
Yes.
And what happens next?
Well, that's it.
And claims come against.
Okay, so now what can I do now that I've established?
That's the question.
This? Okay. Well, realistically, what you can do. Now, I don't want to get too deep into this because I don't really think we're ready for it, but. Okay. Let's say I had a debtor obligation. And let's say that, remember I told you earlier tonight about how to become a true creditor. and taking care of all your public debts, and then you elevate yourself to the creditor position. Well, let's say now that you've elevated yourself and you're outside and you're operating on the asset side, we'll say, how can I discharge any debts? Well, what I may do, once I've already established myself, is I could write a money order for the amount of the obligation. Take evidence of the obligation in that money order and send it to the DTC. The DTC is then going to wire the funds to an account I've already prepared to receive those funds, which will be a closed checking account. Why is it closed? We're only dealing on the asset side of that account. So there is a zero balance on the public side of that account. That's a closed checking account. Okay? DTC wires the funds to the asset side of the account. I then just take a normal check off of that account. I put private. I have a private stamp that goes in the upper right-hand corner of that check, red. And then I take my little stamp, my little without recourse stamp, and I stamp it below the signature line on that check. I've now created an instrument that can be negotiated on the private side of that account. So somebody comes to me and says, okay, you owe us $300,000. Okay, present me with the bill. You take that bill, you write a money order for $300,000, you send it to the DTC. DTC wires the funds to the private side of this account, you write a check. It's like a 10-day process. I owe you $300,000? Present me with a bill. Present me with your claim.
Two questions. What is DTC again?
DTC is the Depository Trust Corporation. Or no, I'm sorry. Depository Trust Company. It's on the private side. And then their parent company is the Depository Trust and Clearing Corporation. That's where your birth certificates are held. The DTCC. 55 Water Street. Depository Trust Company. They do, I think, around between $20 and $40 trillion a year in transactions. Or no. I think they do $900 trillion in transactions. Yes. Yeah, $640 trillion in transactions. They hold like 20 to 30 trillion in assets.
Are they at the same location?
Yes, DTCC and DTC are in the same location, 55 Water Street, New York.
You can go over this process?
No, not tonight. Not tonight. I don't think we're quite there yet. It's a complicated process, for one, and you truly have to be a creditor before we start using this process. See, when we start getting into the whole DTC thing, you guys are going to be operating as creditors outside of the public debt system. Okay?
To be a fully creditor, you have to have shown your birth certificate and everything.
Oh yeah, that should be done way before you get to that step. Yeah, that's like one of the primary steps to doing anything we're doing. We want to establish that we're in control of that trust right away. I mean, even if you don't do anything else, then control that trust and be responsible for that trust. See, if this bond and birth certificate does nothing but put it in your head that you're now responsible for it, then that's good. Because it won't get rejected if mailed properly, registered mail, and the bond is written properly. It won't get rejected. Okay? So if they do nothing with it other than trash can it, if you yourself have now consciously taken control of that trust, you're responsible. And now take that into consideration. That's why, we've talked about how to take legal title to your property. And what do I always follow that up with?
Now I'm responsible for everything that happens to that property.
Well, what I usually follow it up with is, don't do it. Don't do it unless you're ready to take responsibility for that property. Unless you know how to operate as a creditor, how to bond sewage, bond electrical, bond every service that property benefits from. Because if you don't bond up all those different services, then you're not being a creditor. You're creating a huge liability.
And pay all the claims
Yeah, you have to release all the liens on the property. Okay, it's just like seceding. You know, you want to if the state wanted to secede from the union, it would have to pay all its debts. It would have to be square on everyone's books. Exactly.
So bond, can you explain then? Bond them, what those services, what do you mean by that?
What say that again?
Bond the utilities, bond that this, bond that. What is that process? What are you talking about?
It's write a bond, sign the bond, and then mail the bond. And certify their acceptance of the bond. So you would do it through a notary. Okay? Because a notary is going to be the one who certifies. Remember, what's a notary? A witness. A notary is a witness. If I send it through the notary witnessed what got sent. And she's the first level of response on anything that comes back. So she certifies a response on it. Or lack thereof. Okay? Or the failure to respond. She's certifying the process. Okay? She can acknowledge or jurat and do any of those things if you're sending a claim and you've got a jurat or an acknowledgement or something on the claim itself, then she could do that, but she's acting as a witness for the process. Okay? When we're talking about the administrative process, the administrative procedures we discussed 2 weeks ago, the notary is the witness. She's certifying what got sent. She's certifying the response. She's certifying what happened in the transaction. When you have a public official whose job it is to witness, it's their official duty is to witness. Even when they do an acknowledgement or jurat, what are they doing? They're witnessing your signature. So it's their official duty to witness things. So and they're a third-party public official. So a third-party public official whose duty it is to keep records of witness has now certified your claim. That's what makes your claim so concrete. Because no one else operating in public will have that kind of a claim. So you will have the superior claim. And if you know how to get that claim into evidence on the private side of the court, you won't lose any court cases in relation to that. As long as you know how to act colorably in the courtroom. Because in the courtroom, you can't start talking about, I got my birth certificate on deposit, and I'm a creditor, and blah, blah, blah. You start talking like that, they're going to go, okay, you have alternate reality disorder, and you don't get anything out of this court. You got to know how to act colorably. Colorably is, it's fiction. We're dealing in the world of fiction. We're dealing in Disneyland. How do you play in Disneyland? That's it. Yeah, don't pee on the parade. You got to know how to interact in Disneyland to get your remedy.
You might get a psych exam.
No, you get a psych exam for sure if you start talking about anything from the private. You start bringing up anything from the private side, they're not going to acknowledge it. They can't acknowledge it. Okay? They'd be committing treason if they acknowledged it.
So the basic componentry of the bond is a standard document or statement. What are you doing in the bond? What are you saying to them? Does it bind them? Are you saying, now I got $300,000 reserved that you're bound to serve me with? Or
Exactly. If I were sending in a bond, let's say for now this is a process you'd have to research for yourself. I don't even own property. Let alone am I going to take the legal title to any. I like the system the way it is. I have no problem functioning in it the way that it is. So I don't have to take legal title to anything because I know how to control. Okay? I don't have to go through them for my legal title. I can perfect my own claims and control it the way that I want to control it. So if I were going to bond, let's say, protection from the fire department, I would either probably send it into some county level official, whether it be the county treasurer or perhaps some kind of wherever the financial responsibility of the fire department comes from. Where does the fire department get its money? Wherever the fire department gets its funds is where I'm going to want to put that bond. Okay? So where do the funds for providing my sewage service come from? Well, what's that? Maybe. I don't know how much of it would be state level. There may be some things that you do have to bond on the state level. But you gotta look. You gotta be mindful. I'm not going to give you the step 1, step 2, step 3 on this one. If I'm going to take legal title, I'm going to take responsibility. So that means you got to understand what you're doing, and you got to understand what steps are necessary in order for you to take control of that and be responsible. Because it's one thing. Here's the beauty of what I think the beauty of the system is in separating possession from control. Everyone's heard of the Second Amendment, right? Yeah. Something about bearing arms. You have the right to bear arms, right? And they'll cuff them right up for you. Okay? So you have the right to bear arms. Now, in our current democracy, what are you supposed to do? I'm not saying everybody does this, but what are you supposed to do when you purchase a firearm? Register it. By registering it, who's getting legal title to that firearm? The state. And you said, ooh, I like that idea. You know why I like that idea? Because if I gave you possession and control, and you start just walking around threatening people with it, yeah, maybe you haven't caused any damage yet, but you definitely aren't responsible enough to be walking around with a firearm. And it should be taken away. And if you're going to operate in the public where their number one concern is the safety of the public, so you could talk about your rights all day long, but if you're acting irresponsibly, I want them to take your gun away. Okay? That's why you can't give a bunch of debtors control and possession. They're not responsible. The fact that they're debtors shows that they're not responsible. Why would we give them control and possession? That's insanity. I wouldn't give any of you control or possession of anything. Okay? That is taking a position. I'm taking the position that I will not give irresponsible people control and possession of anything. I'm not saying that's a maxim or anything. I'm just saying that's my personal preference. If I were the one deciding, I would not give an irresponsible person possession and control. That's just me personally. I'm not saying. If you were responsible, it wouldn't be a question. Because if I truly was responsible, then I would already have control of that firearm. Because as soon as I got the registration, I'd flip it over, accept it for value, send it into whoever I got it from. Now I control the firearm. But guess what? Even though I have control and possession, I start going around in the public and threatening people because now I think I have possession and control. Guess what? They're going to step in and take control of it anyways. Because you're being irresponsible. Even if you control it with paper. Because controlling with paper doesn't mean anything. It's all about responsibility. Anyone who's going to act irresponsible with property is going to have it taken away. And it's a good thing. It's a good thing. Because in reality, let's say there's a gentleman, and I am not advocating this at all. This is not how I deal in commerce, but there's this gentleman from Illinois. He is the master of operating in commerce, okay? But he's very combative, we'll say, okay? He was brought up on attempted murder, okay? He showed up in the court with an affidavit saying, yep, I tried to kill that guy, and if I do see him, I will kill him. Here's why. Did they take his gun? Nope. That court didn't want to touch that guy. Because he knows enough to be very dangerous. And because he had a claim against this guy. That he said, yes, Your Honor, I tried to kill him, and I will kill him. And I'm letting you know with this affidavit so that when it happens, you're not going to come looking for me. Because he knows the law. And he's operating in common law. And by common law, if someone kills one of his pieces of property, then he can kill them for it. Eye for an eye. That's common law. Execution on the law. So he knows how to execute on the law. But he takes full responsibility. He doesn't walk in there and start arguing about whether he can keep the gun or whether he tried to kill him or not. He walked in there, fully accepted all the charges. Yep, I sure did. I'd do it again. Okay? Now, again, I do not advocate going to war or being adversarial in commerce. I don't think that that's a creditor. Notice how I called him a master of operating in commerce. I did not call him a creditor. Okay? Just because you got the system wired and you know how to use it doesn't mean you're a creditor. Yeah, it's all a way of being. Remember, being a creditor is first a spiritual thing. Yeah, if you're not coming from love and responsibility, you're not really a creditor. Yeah, you're a debtor in creditor's clothing.
There's some creditors' clothing in here somewhere, I thought I saw.
Yep.
The money order you proposed just prior to DTC, that's your own creation?
Yeah, not a postal money order. It would be my money order that I created.
You create yourself?
Yeah.
Okay.
And when you send it in with the proper forms to the DTC, that's what's going to create the transfer to the...
And we'll learn how to accomplish that at a later date.
Yeah. That's a little more advanced than I want to get into, because if you don't do it properly and you don't establish yourself as a creditor, you're going to get yourself in a lot of trouble. Sure. A lot more trouble than you get yourself into with these tax forms. Yeah, maybe.
Brandon, just curious, when you were talking about the checks, when that process went through, what you stamped private and such, if the bank account is closed, the public bank account is closed, where are those funds channeling through? Are you still utilizing a bank as we normally?
The public side of the account is closed, so you got a zero balance over here. Okay? The DTC is wiring the funds to this side, so you've got your $100,000 over here. Because it's closed, it doesn't change the liability side. Okay? When I mark the check private and without recourse, the funds are drawn from this side of the account, not from this side. See, you're truly operating like a creditor, aren't you? You're not creating any liability in the public. You just moved $100,000, but you created zero liability in the public. That's a creditor.
And that's why you're not paying taxes, because you're not.
You won't pay a dime in taxes on any of that. You're not using the banking. You're using the private side. Okay?
Can you explain in detail a bit more about without recourse?
Without recourse is you sign it without recourse because you have no public liability. Okay, if you go into the UCC, look up the definition with why you would use without recourse, no liability. And because it's not a public instrument, you have no liability on it. That's what you're doing. Because if you took liability on it, you'd be creating liability, and it'd be drawing from this side. Okay, let's change the tape.
Money.
Okay. Next question.
So when you go to the DTC and create the funds on that side, can you use that in the public?
Can I use it in the public? Meaning, can I write a check can I discharge a public debt by writing a check drawn on these funds?
Yes.
Yes. Because there's no liability, right?
Right.
Who's going to create the liability on that instrument? The endorser. The endorser is the one who brings this $100K back over to this side of the account. Because as soon as he endorsed it, boom, he got interest in it. And it created a liability on. But I didn't do it.
Right.
Since I didn't do it, I didn't create the liability. I'm not the debtor. The endorser on the check is the debtor.
Now, is there a cap on that side?
A cap on this side?
The funds can be created?
You will get probably a visit if you write checks for over, is it $250,000?
Per account?
Per check.
Per check.
Yeah. Remember, you got to make sure the asset's there first. So you got to make sure you transfer the asset over before you write the check. But as long as you've got enough in the asset side to cover the check, you can write checks up to $250 with no problem. Every minute. I don't know how fast can you write a check.
We're going to find out. What kind of banks are going to be
Now remember, hold on. You guys keep in mind there has to be a liability before you'll get anything from the DTC. Yeah, okay. If we let a bunch of debtors just create fucking money anytime they want, what's that going to create? That's going to make a bottle of water cost $1 million because you guys are going to create. That's why the blocked credit system is there. Because if they let you just create any amount of money you wanted at any time without withholding your interest, dude, you guys would all be insane writing crazy checks. It'd be crazy town all the time. There would be so much money in circulation that we'd have to walk around with wheelbarrows full of it. We'd have billion-dollar bills. Hold on, microphones. You guys make sure you pass the microphones so we get this on audio and video.
I was just curious, are the banks where most of us are probably dealing with now, are they going to honor, I mean, are they going to be the physical entity that those funds are passing through, or is there, I see these places like Wells Fargo has private banking locations.
The funds are here, okay? When the endorser deposits the check, they create their own $100,000, okay? And then goes to the Federal Reserve, it's private side, crosses that off. So you basically, once it's made its trip through the circulation, it's going to end up balancing out here, and this liability was created by the endorser.
And that's when it starts showing up in private and in the public.
Because what is the liability? It's interest. He has an interest in the asset. Remember, interest isn't what I accrue because they're using my money. Interest is I have an interest in that asset. Remember, whenever we were talking about interest on the public side, a UCC1 is interest. It's showing that I have interest in something. Okay? So don't think of interest as what we're typically thought to think of interest as something that accrues on my savings account by pennies a year, or something that increases by hundreds of dollars a month on my credit card. Okay? That's not true interest. That's actually a tax on your interest. Okay?
That's why they credit they don't tax it.
Right. Because it's already a tax. Yeah. Okay. Anyone who's got... Go ahead. Maximum... No, there isn't. As long as remember, there has to be an obligation. So if somebody comes to you and they go, hey, here's $1 billion invoice, well, then you can go get $1 billion from DTC transferred over here and then write $1 billion check.
Does your bond have to be $1 billion? The bond that you set next to your first
No. Remember, you're going to be dealing with the DTC on each individual transaction. Okay.
The block grants that you're talking about, I think I might have missed that part of class.
The block what?
The block.
Blocked credit?
System? Yeah.
Blocked credit is the system you operate in. You remember, who creates all the money? You do. But if we just let you create it whenever you wanted, we'd have serious issues because everyone's debtors. If we just let debtors create money willy-nilly they're going to create incredible amounts of money that isn't a very responsible thing. So the banks, to keep a civil system going, they withhold your interest every time you create money. Okay? In fact, even the account that's created when I sign a promissory note for a house, I created $500,000. And then they take the interest, transfer it to the seller, but there's a hole created there that they attach to you. Because if they don't attach that hole to you, then you'll just go around signing promissory notes all day long. Okay? So they created the credit system, which, if anyone in here really knows anything about credit and your credit score, it's really all about debt. Right? I mean, realistically, the people with the best credit scores are the people who are the best debtors. They have the most debt accounts open, and they pay all the time on them. Because my misconception, I filed bankruptcy like 96 sometime, way back. And from that point on, I was like, okay, I'm not going to use the credit system anymore. Not at all. I've bought in every car since then, cash. I've never had a credit card, anything. I had no debt. And then last year when I started learning about, some of the creditor stuff you can do with credit, I was like, oh, well, shit, I should be able to get one no problem. I've got 0 debt. Yeah, I had a 0 credit score. So they're like, why would we give you money? I'm like, why wouldn't you? I don't know anybody. Aren't I the best person to give money to? Yeah, but that ain't how it works. Yeah. They're like, well, we don't know if you're a good debtor or a bad debtor. We don't know nothing about you.
I have a question regarding how do you get a closed account? Say you've always had an open account. You've never closed a checking account.
Okay, when we actually get into this, you're going to actually have to see, in order to even establish yourself with the DTC, you got to send them $250,000. Okay? Now, does anyone happen to know what the new FDIC insurance is? $250,000. So you go open a bank account, guess what? You got $250,000 over here on this side. You use that to open your DTC account. So you go and you open a bank account, then you close it. But you don't do this because we're not going through the details of the process. Okay? There's a lot of finer details to this process. But basically, you're going to open the account, and in the process of closing it, you're going to be doing that through DTC. Okay? You're going to actually send some forms over to the DTC that are going to enable you to use this $250,000 FDIC to establish your relationship with the DTC. Then you can start working on the asset side. And that account is closed at that point. Even though, because what you did was you took this over here and you sent it over there, and now there's this relationship established. This account gets closed, because that's actually the form that you're using to get this over there, is for closing accounts. So it's not like you're just going to go into the bank and go, yeah, I'm going to open an account, walk in there and say, yeah, I'm closing it. That ain't going to do you any good. Actually, you could still use that closed account, but what's going to happen is your checks will clear. 30 days later, whoever you paid is going to put the debt right back on the books, because they're going to get the check back and it's going to say closed account, not insufficient funds. Oh, not paid on a closed account? It must say both, because I've seen some that actually are stamped closed account.
Yeah. Quick question, Brandon. Is it possible?
Oh, shit. No. Did this just happen? Oh. Hold on. Let me. Hold on. Okay, let me make sure they can hear me. Can you guys on the phone hear me? Can the people on the phone hear me? All right, where were we?
Quick question, Brandon. So I noticed that Chase, formerly known as Washington Mutual, which is now Chase.
No.
Well,
Washington Mutual is still Washington Mutual.
They're a wholly owned subsidiary. Let's just say that they're now.
Cares?
Okay.
They're still their own bank with their own EIN.
Irrelevant. But the point is that they're offering people $100 to open up a checking account, and my belief is because they're acquiring those $250,000 FDIC assets.
No.
They're not?
When you open the account, you created that $250,000. They can't touch it. Those funds are set aside deliberately for, let's say your liability funds are up at $250,000 or above. That asset's what's going to cover your ass, or the bank's ass, I should say, when they fail and they don't have any liability funds to give you.
So as the issuer of that asset, is there any way then to acquire?
That's what we're doing through the DTC. How do you think you opened up your account with the DTC? You created the $250,000.
Well, I'm just thinking as an interim step, because you're not going to go through the full process right now. We're learning about 1099As.
I'm not gonna teach you how to acquire $250,000. Even if I knew how, I wouldn't teach you.
Hey, Brandon, I thought we were doing an unlimited account with the DTC or DTCC. Unlimited.
How is it limited?
Or unlimited, I mean.
How
unlimited
is what we talked about limited? Yeah, if there's a debt, you can handle it. I said, if somebody comes at you with $1 billion invoice, you could write $1 billion check. Or a bunch of $250,000 ones. But I imagine if you wrote $250,000 check, that's going to probably get you as much attention as $1 billion check. It's
So wait. That $250,000 that's created right there, once you deplete that 250.
No. There's no depleting.
There's no depleting.
This 250 just establishes your relationship with the DTC. Then you have to start transferring stuff over to use it.
Okay.
Okay. It's not about this 250 grand does nothing but open up your account with the DTC.
Got it.
That's all it does.
Okay.
Because that's the requirement. To open up an account with the DTC, you need 250 grand. And it just so happened that for this year, they raised the FDIC to 250 grand. So it's almost as if they're giving you the opportunity. Here it is, folks. You want to be a creditor? Step up. Yeah, step up. Because up until then, what was it, 100 grand? 200?
100.
See? So check this out. And it goes back to 100 after the end of the year. So you guys have a year to set yourselves up with the DTC as creditors. Okay?
This year.
So I was thinking we'll probably wait till like December 1st, and then you guys can like schedule consulting meetings all the last week of December. Isn't that how you guys like to run it?
Didn't they start that around October, November? So I think it runs out in November.
It may be.
It said on the fine print,
10/31/09. Okay, so Halloween of 09. Oh, interesting. 10/31. And what starts going in on November 1st? 1099s. There's a reason for that date. You have a question? Go ahead.
I agree. Let's have some summer school. Does this 250, the additional 250, does that have bearing on the bill that just passed as far as them being able to use that expansion of the credit rating at that point?
I don't know what they're doing as far as what they may be doing on the private side with these funds. Yeah, I don't know. I don't know why they did it or what. I mean, to me, it seems like they did it so that you could establish yourself as a creditor. That's what it seems like. Because remember, we also just ended our third bankruptcy. And by biblical law, 3 70-year terms, that's how long the Jews were held in Egypt. Okay, so now you're being freed. Pharaoh may freak out, but you've been freed. Okay? 210 years have passed since the first bankruptcy.
Right. When do you think you might touch on the DTC?
And probably in a couple weeks. What I want to do before I start going into this deep, I'm going to personally go meet with Tony King, Pastor Tony King, and get as much of an understanding as possible as I can before I start disseminating it. And I'm going to do it. See, I don't want to start disseminating this information until I have a firm understanding and I've done it. Then, where's he located? He's, I believe, in Ohio, maybe Michigan. I might. Yeah, think about how much Jack Smith I can listen to on a drive to Ohio. Yeah, actually, I don't think I have that many. Who's got the microphone in the back? You have a question? No? Okay. Anything else? Wrap up here at a reasonable time? Go ahead.
Brandon, let's say that you owe $100,000 on a debt, and we've talked about acceptance for value. We've talked about doing money orders. We realize that those are private assets that we're creating, right? That don't act, and the bank really wants your liability funds.
Right. That's why you do this DTC thing.
Right.
Because they're going to get a check that will give them liability funds as soon as they endorse it.
Exactly, but I'm thinking until we get to that, creditor stage, has anyone had any success with saying, here, look, if I give you a promissory note, which is a negotiable debt instrument, have they had any success in the banks opening up a second account and then using the liability funds from that to pay off another obligation? Am I making sense?
I don't think I follow you, no.
Well, what I'm saying is if I give the bank a promissory note and say, here, I owe you $100,000. I'm giving you another promissory note, which is as good as cash. They're going to send that to the Federal Reserve. They're going to up their reserves by $100,000.
No, they're not, because there's no liability funds connected to that.
Well, that's what I'm saying.
That's an asset.
Yeah.
So the bank is like, they don't get anything out of it.
Well,
why would they do that service for you when they get nothing out of it?
Well, what I'm saying is when you gave them the first promissory note, they created the liability funds on the right side of the ledger, right?
No, you created the liability funds on the right-hand side of the ledger. Okay? But they got you to sign a contract that says you were going to pay it all back, even though you created it. That's the blocked credit system. Okay? So if we didn't use the blocked credit system, again, we'd all just be... Imagine if they were going to do this for you. Everyone tomorrow would go write billion-dollar promissory notes, deposit them into bank accounts, and everyone would be a billionaire. And nobody would be working. And all of a sudden, a bottle of water would cost a couple $1 billion.
So the only thing an acceptance for value or a banker's acceptance is doing is placing you in honor, but it's really not offsetting or discharging the obligation.
No. The only people who really have success with that process is when you do the administrative procedure and you've got your witness, your certification from your notary and everything else, because now you've got evidence that they accepted the instrument. And that's what you're going to use to set off or to close that account. Because they're not going to negotiate the private instrument. They're not going to acknowledge it. They probably won't. I've heard in some cases where they actually take these private instruments, do the banking on it, and debt's gone. But again, they shouldn't be doing that. So just like when people were doing their 1099 OID and everything wrong and they were getting returns, they shouldn't have got a return, but the IRS overlooked something, so they got a return. So in the cases where promissory notes and money orders have actually discharged a debt with no other process involved, it was probably somebody overlooking something.
Except for the IRS, though, which you said operates on both jurisdictions, will accept a money order.
Not necessarily, because I've heard plenty of people say they said that they didn't get it, or that that instrument's no good. Okay, so it does depend on the process and how it's sent in. You got to make sure you're working with the private side of IRS.
Okay, thanks.
To get your remedy with an asset instrument like that. Okay, anything else? Let me make sure people on the phone are satisfied. Oh, you got one? Go ahead. Oh, no.
Any questions?
Nope. Okay. Anyone on the phone have any more questions before we wrap this up? Oh, hold on. Let me give you some volume. Anyone on the phone? No, they're not muted. I unmuted them. Alrighty. Looks like everyone's been satisfied. I've made all parties whole and complete. I have a zero balance. Thank you, everybody.